Bitcoin could take off shortly for another epic run up. I'll show you what you should watch for. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is an ascending triangle on the cryptocurrency Bitcoin. So hang around and I'll show it to you. But first, we have a few active trades to go through. Later on, today's trading maxim. Happy Monday, guys. Let's start off the week with a bang. Remember to click the subscribe button and hit that bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Here's Tesla. It's pulled back quite a bit here from the high, but it hasn't hit our break-even stop loss right here just yet. We're waiting for the parabolic SAR to track up here so we can start following the stops. Canadian dollar, Japanese yen retraced this whole move right here, came down and hit our break-even stop right there. So we've got a little bit of profit on this one, and I'm done with it for now. The crude oil hit the first target on Friday right there, and I closed half the position for profit, moved the stop on the remainder to break even. I've turned on the parabolic SAR. As soon as that thing drops down here in a few days, we'll start trailing the stops on this one. As I mentioned, the Dow Jones set up from a couple of weeks ago, triggered on Thursday right there, pushed up on Friday and retraced about half that move. Still waiting for it to hit the first target of 24,442. Again, as I mentioned, the euro Canadian dollar triggered on Thursday right there, retraced part of the move again, did not close back inside the bull flag. I'm still long with my target of 155.38. And the Australian dollar, US dollar is attacking the bottom of this bear flag right here, so watch it for a sell trigger this week. And that's it for the active trades. Let's take a look at today's pick. Bitcoin looks like it's about to jump up some more with this ascending triangle consolidation that's forming. An ascending triangle consists of a strong resistance level like this one here at 10,220 with several historical touches or approaches of the line and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern and I will only take a buy signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the average true range or ATR, which shows the average length of the last 14 candles. And here's the trade plan. We're going to buy a daily candle close above the ascending triangle. On the breaking candle, we want to see the volume bar reach up to the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll take a half size position to reduce risk. You can calculate the percentage by dividing the volume here by the volume average and you should get 0.75 or better. If you don't get at least 0.75, I suggest standing aside on the trade. The stop loss is 1.5 times the ATR and the first target is 1 times the ATR. So let's say this candle pushes up here and closes right here above the triangle, and just ahead of the close we will want to put in our buy order right there. And on that day, take a look at the ATR, multiply that by 1.5, measure that distance behind the entry, and that will be your stop loss. Measure 1 ATR above the entry, and that'll be your first target. If after entering the trade we get a candle close back inside the triangle here, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this using two positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on Bitcoin. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today's maxim of the day, Tim's trading maxim number 40. A loss is not a loss, it's a business expense. As you'll hear me say from time to time, mindset is extremely important in trading. Thinking about losses as the cost of doing business makes it far easier than thinking in terms of losses. Losses are simply a business expense. Remember our Bitcoin trade plan for today. We're going to buy a daily candle close above the ascending triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing, it's free. I'll put a link below the video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education series this Wednesday when I'll talk about spread and commissions in currency trading. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you Wednesday.